Although, even during times of good times, the stock market can often be a source of utter confusion and fear for some people. Thus, it should not be surprising that we have witnessed, on a daily basis, ever-increasing stock market fluctuations in both positive and negative directions. Some have watched the asset value or market value of their portfolios plummet dramaticism in the past month. Since it is generally unwise to overreact to what occurs in one day or shorter period, taking this issue into account is vital. A recession was predicted by many experts before the current pandemic, either this year or next. The reason for this is that recessions will occur periodically. However, another reason is the way the economy, and therefore its impact on the stock exchange, have been propped up by the huge amounts of money pumped into the economy by the federal government. Many wonder what types of investments to make with what is probably coming up in this regard. With that in mind, this video will briefly discuss, examine, review, and discuss 5 possible types or categories to prioritize. Number 1. Defensive stocks. Many companies in economic sectors that function as utilities, such as electric and gas companies, fit this niche. Stocks, which fluctuate less because their industries are seen as necessities and are generally predictable, are called defensive stocks. These types tend to pay stable, reliable dividends and undergo far less fluctuation. Number 2. Niche-focused. Think about what might be considered essential in the near to intermediate term. What specific niches might become more in demand? For example, given what has occurred, we might suggest that companies specializing in medical tests, medical research, medical or scientific supplies, etc. perform better than most others. Number 3. Balanced. In terms of investing and investment strategies, there is no such thing as a crystal ball. Therefore, creating a well-diversified portfolio that emphasizes financial fundamentals, as opposed to market timing, speculation, etc. would make sense. Number 4. Value-based. Real value becomes even more relevant in uncertain times. Consider companies with quality fundamentals or basics, meaning their price went down more because of overall price trends rather than their own weaknesses. Number 5. Asset management mutual fund. If you want to let investment professionals better guide you, you may want to consider investing in asset management mutual funds with historical performance in both rising and falling markets. Hopefully, this video has helped you to look at the bigger picture, rather than haphazardly. Do you have the discipline to help yourself? Thanks you for watching, and don't forget to subscribe to our channel.